Broker Daily Uncut.
Broker Daily Uncut.
News, views and opinion about what's shaping Australia's mortgage and finance industry.
Hey, how you going? Jack Campbell here, editor at Broker Daily, back with another episode of Broker Daily Uncut. Joined in the studio by Alex Whitlock. It's just us two today. Phil's gallivanting about up in Goldie, is he?
Just us two, yeah. No, Phil's up at ARIC, which is the Australian Real Estate Conference. Big deal for agents.
Yeah.
It's run for, I'm gonna take a wild stab and say probably about 15 years. It's been going a long time. It's kind of hosted by McGrath. It's a John McGrath initiative, but it's not linked with the McGrath business, but I think he saw an opportunity, kind of several years ago to put on a big event up there in the Goldie, and it's always held in the same venue. They get sort of about 5,000 from the industry there. It's a kind of a 2-day event, so it's agents being agents and having sort of the work commitments they have. So it starts on a Sunday and then runs to the Monday. So I think a lot of them get there for the Saturday night, 4-day conference. I had Kamala Harris as the keynote.
Oh, really?
Which is a kind of an odd choice.
But big name.
A big name, but an odd choice for a real estate conference in some ways. You'd think Donald Trump being the... He's got another job, I think, at the moment.
Yeah.
But, it was sort of an interesting choice. I haven't heard back from Phil. Phil sent me some pictures when he was up there, so he sat in on her talk. So, anyway, that's where he is.
Yeah.
Doing his thing, marching around.
I spoke to a few of the guys on the REB SPI side here at Momentum, and they were going up on the Saturday, and, a weekend in the Goldie's always a big event, so hopefully they made it to the conference.
Interestingly, one of our mortgage broking business that sort of is associated with Momentum, Finney, they've gone up there and they've exhibited, and you'd perhaps wonder why they're going up there, but they've gone up there to look at sort of building up referral partnerships, and they said they've had a very productive time. It's interesting, in theory, how much scope there is for brokers to build referral relationships with agents. You'd think the whole thing was sewn up, one way or the other with in-house, sort of mortgage brokers or, with sort of scaled groups, like Loan Market, obviously associated with Ray White and so forth. But they've had a very productive time. Interesting chats. They specialise in investment. So I guess on the property management side of things, you've got, when you only look after investors, you've got having an investment specialist is quite a strong thing from a mortgage proposition.
Yeah, 100%. I think it's a smart move. Trent and I talk on the Finance Specialist podcast all the time about building referral networks, whether that's with real estate agents, accountants, if you're working on the SME side of things. I think it's important. It just makes you more of a holistic service for your clients, but also it can bring in different avenues of borrowers who you may not have had access to before through the referral partnerships. So smart move there over at Finney Mortgages, getting up there. And then they're always a fun bunch, the real estate agents.
You know what they are? They're very different in many ways to our audience of brokers, but they are a fun bunch. There's a lot of Phil sort of anecdotally said there's an interesting level of diversity there. There's a lot of female agents, and he made a point of saying that there's a notable number of female principals, young and older. There's a very strong presence for females in the real estate industry. So, but it's good fun. Agents are a particular type. I think they're certainly on the sales side more salesy than a lot of mortgage brokers. That's their job. Their communication is excellent. They often look very, very sharp. Sometimes lacking socks in certain cases, but
that's quite the look for him, isn't it? They do cop a lot of flack on social media.
I made Phil take his socks.
Yeah,
you don't want to see him wandering around with bare ankles.
No, we don't want to see that. Well, we've got a lot of news to jump into for this week, namely the RBA cash rate cut. We'll just throw to a quick break and we'll be back into it after this. And we're back with Broker Daily Uncut. Now, Alex, the big call last week was the RBA cash rate cut. Not really surprising, but long awaited. So any thoughts on that? It was, I say, not really surprising. Everyone sort of coming. But now that it's happened, I think everyone sort of breathed a sigh of relief.
Yeah, I've been factored in. It's going to take a while, I think, for it to start to be visible in any kind of results. I looked at the CoreLogic results for the weekend's auctions, and they kind of made some reference to the rate cut. But the reality is, the auctions were scheduled weeks before, so auctions are not going to go up as a result of a cash rate cut. There was also, I'd say, tepid clearance rates. Yeah, they've been up a little bit. I don't have the data in front of me, but I seem to remember that I think Adelaide was 74% clearance rates, and then I think possibly Melbourne 73, and then Sydney 72. Better than it has been previously, but it's not setting the world on fire.
Do you think that, once the cash rate comes in, we say that a lot of, the average punters look at that as, a bit of an indication whether to jump into the property market? So if they have auctions going on, they've heard there's just a cash rate, they're more inclined to bid a bit more money on a property?
You're absolutely right, I think. But you've got to look at the process starts before, because if I'm going to be bidding at auction, I've already got my finances in place, which is going to be relating to, the previous level of rates and serviceability. So it's probably, if I'm actually bidding at auction at the weekend and the cash rate was cut, 3 days before, it's probably not going to impact my ability to purchase. I think what you will see as this sort of settles is, I think, a number of things. Certainly the buyers that are probably at the lower end of the market, is going to make a big impact to them. And I think that and I'm not the only person to say this, I'm only really sort of going on what I've read and what my instincts say, but the lower end of the market, I think you're going to see heating up. I think certainly first-time buyers, first-time investors, or investors that are looking to buy those kind of sort of lower cost properties with a higher yield are going to start becoming a bit more active in the marketplace. You've got to look at the other side of the coin, though. It's people who are selling. And a lot of vendors, particularly in the resale sort of market, where they're looking to sell their home and upgrade to a better one, it's a funny situation, because you want to get the best possible price for your house. And then you're going to look correspondingly, if you're buying something similar, unless you're moving interstate, you're going to have to pay more. So financing affects everybody. I think that listings are still fairly low. I think it's, there's a lot of stock that isn't on the market. Agents can only sell what they've got in front of them. So I think I've read some things, Jack, sort of saying that there's going to be a 10% increase in property prices, which I think is just crazy, because it's everything's going to go up 10%.
Yeah, it's kind of just a figure thrown out there, isn't it? It's interesting. I did read a few things as well off the back of it, and a lot of the people who we've relied on for predictions and whatnot in the lead up to the cuts reckon it's going to take a few consistent cuts for any sort of impact to be felt. But it is good news on the horizon. However, we got along to the RBA decision, the press conference that came after. You might have seen Broker Daily journo Adrian Stojanovic with his questions to Michelle. And I got a bit of a funny quote where she reckons borrowers are in a pretty good position, she said. And we had a few comments on the article that sort of thought that was a little bit out of touch. And even went a bit further and said, calling on a new RBA governor to come in. So I think those kind of comments tend to annoy people, because it's sort of generalising and not really taking into account the average person who is struggling at the moment.
It's a tough market for borrowers. It's tight. Affordability is, just at a crazy level, really. I'm sort of fishing back into an article that I read. I don't know if it was whether it was an REA thing or a CoreLogic. I'm sure that it said that about 30% of suburbs across Australia are now in excess of 1 million.
Oh, you would have seen that on Broker Daily.
Well, there you go, you see.
1 in 3 homes now worth over $1 million, which is just crazy.
You've just got to look at that. And I believe from the article that it was across Australia. We're not talking capital cities. I mean, that's huge money. If you're looking to get into the market, that's an awful lot of money to sort of get in. Look, I realise we've covered many times that there are obviously pockets and suburbs and areas where housing is a lot more affordable. I'm an investor. I bought last year in Melbourne, in one of the outer suburbs. I'm going to say Greenfield.
Greenfield, where's that? North, south?
I know. It's a Strawflower Circuit is the address, but it's up near the airport.
Oh, yep.
And I actually had a look at the properties for sale in that particular suburb at the weekend, and you're looking at a four bedroom sort of pretty new build, smaller blocks, sort of 400 square meters, but you're talking sort of $700,000. Now, look, a lot of money in a lot of ways, but on the other hand, brand new build, 4-bedroom house, a comfortable drive, a commute from Melbourne CBD. That's pretty affordable, and they're nice. They're nice places. You know what? They're not old terraced houses that were built 150 years ago, but they're just good quality 4-bedroom properties. Good family accommodation.
Yeah, we'll say that's 40 minutes to an hour out of Melbourne CBD. You go 40 minutes to an hour out of Sydney CBD. You're not getting a place that big for $700,000. Yeah, a bit of a disparity there.
I think Melbourne. I think Melbourne from will. Everyone's been saying it for a while now that it's geared. It's just geared to grow. Now, whether it'll happen quickly, I know there's some. It's not waving a magic wand with a 25 basis point cut that's suddenly going to spark the Melbourne market onto fire. But I just think the foundations are there. I think people will start to look at that market across the board and see opportunity to buy there, whether it be owner occupier or sort of investors.
Yeah, well, Melbourne had a bit of a lag following the pandemic. The economy was doing it a bit tough, so it's taken a bit longer to rebound. But obviously you saw the signs. That's why you invested down there. So
I'm not the only person, but I think it's a good. Melbourne's a fantastic city as well. I'm a big fan of Melbourne, but I just think that the market there represents good value now, whether you're living in Melbourne or whether you're looking to invest.
Yeah, absolutely. Well, plenty of stuff going on in the property market in and around it, but would like to get a bit more into the lender side of things following the cash rate cut.
Yeah, and I wonder, Jack, what you're hearing. So we've got our 25 basis point cut. What's the forecast moving forward?
Forecast moving forward, it's hard to say because everyone has a different opinion each week, but some are saying the next couple will be cuts as well. But again, that can change on a dime. You look at Trump's decisions can have a massive impact, and it seems he has a new call every week that throws a spanner in the works. So hard to say, but hoping for the next couple calls a cut. We'll see. But it was good to see the lenders pretty in unison immediately passing on the full 25 basis point cut. I know last time there were a few that didn't, and media were pretty quick to vilify them, and I think they learnt their lesson this time.
Well, you got shouted at, didn't you? Because when you ran your story at the time of publishing, you got the lenders listed, and I think a few came back. And
well, we had this was from realestate.com.au. Their data, they had the name and shame list, I suppose, of the lenders who had passed along the cuts, but also those that hadn't. And I did say in my article it was as of 22nd of May, so that was the cutoff date. And a few angry lenders came in on the 23rd of May saying that they'd passed along cuts, which, I'm not going to sit there and go through it.
Unlucky.
Each and every week, but
move a day quicker next time.
Yeah, I guess so. I think they were waiting to see what everyone else did rather than jumping on it, which, that's your loss then, isn't it?
Yeah, I mean, I thought I was universally expect that everyone's going to pass the full cut down, or largely. Are there still lenders that are yet to make the move, I assume? I mean, obviously you haven't updated that story.
I haven't updated the story, but yeah, there's still a few that are yet to move. I wouldn't be surprised if more start coming through, because last time, the February cut, that was the first cut in 4 years, and there were a few lenders that lagged a bit, and borrowers weren't too happy about it, obviously, because they've been doing it tough for 4 years. They finally get a bit of relief from the RBA, and their home loan provider didn't want to pass along the cut. So understandably annoyed at that, which I think they learnt their lesson last time, a lot of lenders. And even with the RBA cut immediately on the 2:30 when Michelle Bullock made her announcement, lenders were sending stuff through that they'd passed along the full 25 basis points cut, not only to their variable home loan rates, but to business lending as well, a lot of them.
Yeah, that's good.
So, again, it's not a magic wand, as you said, but a bit of relief for borrowers, always a good thing. We'll just throw to another quick break. We'll be back after this. And we're back with Broker Daily Uncut now, moving on from all the hustle and bustle of the RBA calls. You might have seen in the bulletin this morning, ANZ and Westpac leading in commercial broker usage, and found a bit of a trend in there. This was from Agile Market Intelligence, our research partner, and in their Broker Pulse survey, ANZ and Westpac also had the fastest turnaround times of the majors. So brokers clearly appreciating fast turnarounds when it comes to their commercial loans.
Yeah, I saw that story. It's interesting that that you got sort of two heavyweights there leading the charge. Turnaround times are very, very important in any kind of lending. And I caught up with Sam McCall, who I know very well, and I had a sort of a really good chat to him actually last week. And we were just talking about the importance of turnaround times, approvals for the borrower, and you've got the interest rate. That's one issue, and of course, as a borrower, I need to make sure that the interest rate is favourable to me. But the importance of a broker is about being able to give that approval, getting for the lender to actually go along and do their assessment, and then of course going through to a smooth settlement as well.
Yeah.
So it's really it's interesting how important that is, and the influence that has with brokers on how they view their lender.
Yeah, definitely. I mean, you only have to look to the rise of the specialist lenders and the non-banks and the private credit providers, how fast they're all rising, and you pay a bit more money, but they have that quick turnaround time. So obviously there's the certain type of borrower that needs that fast turnaround and will appreciate it. And brokers who are operating in the commercial asset finance space aren't bound by the best interest duty. So they, obviously enjoying going to a lender who's going to give them a quick turnaround.
But you've got to look at turnarounds are so important, because it's not as simple as just getting it's not just as simple as getting a quick decision. The stress that relates to that turnaround time, and then the time spent for the broker working on it, dealing with a customer that is anxious. Fast turnaround times are so important for brokers and for their customers. It's a critical component for the brokers. And if as a broker I know that I've got a lender that can consistently deliver fast turnarounds, as long as they're in market with sort of policy and pricing, they're going to be a first port of call for me. So it's interesting looking at the commercial space, to see that NZ and Westpac are they're leading the charge.
Yeah, I mean when you look at the data and you see the correlation between it, it's not surprising, but it's just interesting to see there's data backing up that quick turnaround times from lenders are obviously appealing to brokers, and they're getting you more business. So lenders out there listening, amp up your turnaround times and you might get some more business.
Yeah, it's certainly popular with brokers.
Yeah, definitely. But there are other, obviously, like I said before, the specialist lenders, those who, hone in on the business lending side of things, had turnaround times that were like a fifth quicker than some of the majors. So there's a lot of options out there for brokers who want to get even faster turnaround times as opposed to the majors, because obviously the majors don't quite have the capacity as those smaller business lenders.
Yeah.
But yeah, if you can turn around your deals quickly, brokers will appreciate it, and borrowers will too, right?
It's getting the balance of scale. If you're doing big volumes, then you're a bigger business, and then it becomes more challenging unless you have an incredibly good infrastructure in place to facilitate quick decisions. Smaller lenders by default should, or have the potential with a more bespoke service, get a sort of more human interaction and get a faster turnaround. Wave Money, for example, we know John pretty well over there. That's certainly one of the strengths that lender has in terms of dealing with its customers, because it is a more bespoke service. Good access to credit. But yeah, it's a key thing, and it always will be, whether it's commercial or residential.
Yeah, and I think it's so effective that we have like lenders like on this commercial post, like Prosper and Shift, that were rivaling the majors with some of their offerings. So obviously those specialised lenders honing in on a niche, it's working for them, and they're able to compete with the big dogs.
Absolutely. There's a market there for you.
Well, thanks again for listening, guys. Unfortunately, that's all we have time for today. But if you want to check out more podcasts, visit brokerdaily.au. We've got Alex on the Business Accelerator podcast with Jason Back, or me with Trent Carter on the Finance Specialist podcast. So tune in. Thanks again for listening. We'll chat to you next week.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs, and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.